All right, y'all know us as the Real Estate Lab. We're back again, and today we're going to talk, as it says in the title, mortgage interest rates. I know it's one of those things that people either love or love to hate, and so today I think it's time we started talking a little bit about that. So we have a couple special guests. We've got Jack. I don't know how to say your last name. Is it Lieb?
That's short on the screen, but it's Lieberman.
Lieberman. Oh my gosh, I knew that. Who's returning? He's been with us before, I think maybe about a year ago. And then we've got Kim Burns, who's also a lender in Austin, Texas, and that's going to be great. I think it's a good conversation. We're going to start off with JJ. JJ, you pulled something up that I think is a great starting point. Do you want to share that with us?
Yeah, let's get into it.
I love it.
Because we all know the interest rates and the prices have this relationship. So this is from Redfin. Hopefully these are super accurate. And it says in April 2023, Austin home prices were down 12.3% compared to last year, selling for a median price of $570,000.
Okay.
So you could see the 2021. You could see this steepness here.
Yep.
I think this is where things started getting a little crazy. And as 2021 blends into 2022, you see this peak.
Yep.
And then moving into 23, we're about here and wondering where is this going to continue. And if I scroll down lower, you could see that per month, for example, April 2023, down here at the bottom, April 2023 for Austin, Texas, median sales price $569,950. Growth negative 12.3% year over year.
Well, and we all know that that's kind of a product of the pandemic, right? What are your thoughts on this, Randy, Kim, Jack?
I had always hoped that drop down from 2022 to 2023, I had been hoping that we were going to actually drop down more before it started to pick back up for us in March, because the interest rates were slightly improving and everybody was kind of getting in the groove of 6% interest rates and being okay with it. I just felt like for Austin that we had some more room to go to make it just a little bit more affordable. And I was ready for that to get down to some 2021 levels a little bit longer. So, but at the same time, it is always a good scene to see your town having attention, having appreciation. And I get that, but I just also felt like we just needed a little bit more of a retraction. I was ready for that, for my opinion.
So I heard you mention interest rates. Kim or Jack, do you know what the interest rates are today?
Well, go ahead, Kim.
No, please, Jack, go.
No, it's a spread. If you, depending on your down payment and your credit scores, you're going to be anywhere from it's a wide spread with the product mix of occupied or non-occupied from 6 to 8%. And it depends on how many points you're paying. I come from a world when I began that the interest rates were at 18% on first trust deeds and 21% on second trust deeds. So,
ouch.
I think we're seeing a lot of activity in real estate throughout Texas and a lot of other states it's just jamming. There's a low supply of product. Folks are finally understanding and accepting the rates, and the first time folks and buyers getting in, I think they're getting it. And the old, what did we do last year, guys? Do you want to buy a house at $100,000 over market or $125 under real value? And the interest rates will take care of themselves.
Kim, are you seeing a lot of applications come in for people looking to buy right now or in the last couple of weeks while the interest rates have been what they are?
Yes, a great question. So ironically, it's indicative of what is going on inside of kind of like school and kids and holidays, right? We're rolling into the summer. So applications have kind of right around that end of February going into April, seems like everybody was kind of getting spring ready. So there were quite a few applications getting ready for that moment. And what we have found here just in this latter part of May, and I think it's because everybody was so bent on knowing what everybody was expecting, this big drop as a result of CPI in May 10th. Everybody was really waiting on that number, and it bounced from, we bounced down in rates, and then it kind of started trickling back up.
Okay. I'm hearing some jargon. Can you help us with what is CPI and what do you mean they were waiting? What are people anticipating?
Yeah, so consumer price index
Yep.
is what CPI is, and that's in simple layman's terms like how we as Americans spend money. Okay, which has it's a reflection of inflation of what's going on right now. Okay, and so when there was this, as lenders, we were very attuned to May 10th, thinking we were going to go into the summer, right, with here we go and rolling in, and rates went down for about 48 hours, and then they trickled back up.
So we as consumers, what you're saying is all the consumers that are looking at buying houses were expecting that the rates would dip. And what happened is it dipped for 2 days, and now it's I'm not going to say skyrocketed, but there was another spike.
Correct. And the spike was mostly around conversation here in this last 2 weeks around trying to get settled on the debt ceiling. Right? That had a huge impact there. So now that has somewhat been handled, we're now rolling into people getting hopefully the next wave next Tuesday, which is another consumer price index read.
Okay.
And the Fed will speak Wednesday. We should see, hopefully, as inflation begins to continue to drop slowly but surely, again, rates will drop. And as lenders, we get excited because that means applications will begin to flow as confidence builds again.
Randy, JJ, what do you think about people that are coming in right now? Do you feel that this is something they're paying attention to? Like your buyers or even your sellers?
They're all aware of it. I actually kind of laughed a little bit when you made sure to have Kim do a good job of explaining the CPI report, because it's like, at this point, I feel like every American knows what that CPI report is, because we're all so tired of hearing about it in the news. But of course, that's never the case. There's still need to make sure that people know what we're talking about on here. But then it was kind of a nice break to focus on the debt ceiling and to not have to focus so much on inflation, CPI report, and the jobs report, and to have something else to look at and talk about. But then we really needed it to get settled, and it did, and that was a big celebration. And it's like, oh, but we're just going to go right back to talking about the CPI report on June 13th. So like, we're just going to still hang out here in the high 6s and 7s. And my clients are aware of it, and they do know that that's, my sellers, they know that they want to make sure, like, well, what do you think is going to happen with those interest rates? The jobs report finally got settled, and so now the CPI report, and so they're very focused because they want to make sure they're listing at the right time. The buyers, honestly, at this point, at the very first meeting, I make sure to talk about, don't worry about interest rates. We handle that in negotiations. We can still work through this market and make sure that the interest rate is where you need it to be, as long as we shop smart and make sure to kind of approach it in that way. But I do think that there is kind of a flurry going on with buyers right now, because there's a lot of multiple offers happening in the Austin area. And I think it's because everybody is wondering and feeling concerned about the rumors that go around of interest rates going into 7s and up to 8, because that has been swirling around in the articles a lot lately. And so I feel that there's a little bit of a FOMO situation possibly brewing.
FOMO, that's a fun word. I just want to say thanks for the comments, y'all. I've got Realty Hack, Sunny Tracy, and Barbara that all said they like this info. So I think we're on the right track. The reason why I'm announcing the comments is because we're also on Google Podcasts, Apple, Spotify, every other podcasting platform, in case you wanted to listen on your drive to or from work, since that's a thing now. So Jack, Kim, where do you see this going on June 13th? What do you think is going to happen?
Nothing.
That's actually it. Nothing. Whether it goes up a quarter, whether we pause, the market's not reacting. It's accepting, and it is short-term rates. We got to remember that it's all affecting short-term. If you look at the 30-year bond, it's not a correlation. And we got to keep that in mind. It's not a correlation to the 10-year treasury. It's the Fannie 30, Freddie 30 bond. And, you know, are we going to be in this trading range through, I'm going to say till next year, until 2024 is my opinion. But who am I?
So you said in the trading range, you're talking like the 6 to 8% range?
Yes, you'll see some in the fives. We've seen it in the fives. Kim, you've seen it, right?
January, yeah.
And if you can catch it, you know, what do we tell our buyers? The same thing. You're buying a good price right now. Hang on for a couple years. That's when that's when you're gonna see softening in the rates. And I'm saying late 2024. It could go to 25. So that's this economist's opinion.
So we've got a question from Bishop in the comments. He says consumer spending is 70% of the U.S. economy. Any thoughts on inflation? Whoever wants to tackle.
I do know that we've been waiting for the lag to catch up for shelter inside of inflation. And so that's supposed to be kind of a big relief that is supposed to come through right now. But I keep feeling a little disappointed that it's like, well, any day now, that'd be great. But that is supposed to, I felt like, be flushing out here and through the summertime. But you know, maybe our two lenders have a better idea of that particular aspect of it. I do know shelter was a big holdup on seeing improvement on the inflation numbers.
Yeah, I'll piggyback on that. I definitely agree. We're waiting on that moment. I also wanted to just kind of reiterate a little bit about what Jack said. There will be a reprieve, right? Like I want people to leave and who are watching to know that this is temporary and not temporary in the means like we're going to go back to 2s and 3s, not that day, not those days, right? But more along the lines of inflation, we'll get a hold of it. What we just have to make sure we do it appropriately, right? So it doesn't send us into a different type of economy situation. So in terms of how we feel about inflation, again, as mentioned, just as people start to build their confidence around it, I think maybe just a while ago, Jack mentioned this as well, as if you can afford to buy the home, now's the time because the price is where it needs to be. And we can do things later to refinance you to help save you money later.
I think there's been two camps of people too when it comes to inflation and what is the Fed going to do about it. For a long time, there was a camp of people thinking, well, they're going to dial it back because we're seeing some improvement and they don't want to really crash this economy. And so, you know, maybe we can get some 5s here over the summer. But then there was another camp of people saying, like, if you read their minutes, if you read their notes, they have zero intention of really veering off that path until they get to their 2% goal. And I guess I'm starting to kind of lean more in favor of those frame of thoughts because it's true. Every time they just kind of stay steady of the course of we haven't reached our 2% inflation, so we're going to continue to raise the Fed rate. And so I feel I actually agree with what they were saying a little bit earlier that we're probably going to be seeing this all the way into 2024 of this 6 to 8%.
So I have a question. I think I heard someone earlier, I think it was you, Jack, who had mentioned, or Kim, mentioning affordability. What do you think is affordable? No, I think it was you, Randy. What do you think is affordable to people right now in Austin? That people that are looking in Austin, what does that mean? That's a hard question to answer, right?
Were you directing that at somebody?
At the world.
At the world.
So if you have a comment on what you think affordable is, go ahead and put that down there. But I want to hear what we all think affordable is.
I'm finding affordable for my buyers to be coming in at or slightly under list price with concessions applied to buy the interest rate down to high 5s, low 6s. And I know that that's not really a straightforward answer, but that's really what I continue to be submitting offers in that way and trying to put that cost on the sellers, unfortunately. And for my sellers and my listings, I advise them to definitely list under what the market value is so that they don't get laid on with concession requests.
Okay. So what you're saying is whatever the number is that's listed, affordable is less than that.
Yeah. Yeah. And it's a combination too of purchase price and points. So that's why that's what I was talking about at the beginning of the video. I felt like we needed more time going down. We just didn't quite make it there. It's still not affordable in many scenarios.
You know, you have a lot of people priced out of the market, but affordable is what your buyer feels comfortable with. And we as lenders want them to be comfortable with those payments. And you real estate agents just keep on offering and get the best deal you can.
Oh, okay. I was like, you can go so many ways with this conversation. We do. JJ, I know you've been quiet for a minute because we've been talking. What's up?
When I think about affordable, it's relative, right? What I think is affordable might be different from what some other people think are affordable. So I have another infographic that shows the migration patterns.
Oh, we're going to come back to that. I love that. Please hold on to that. That's a really good
important one. Affordable to who is the real question.
Yeah. So before I pull up Aaron's comment, so I feel like affordable is whatever the jobs and income and family dynamic support for the real estate in the area. So if the median income is, let's say the couple, let's say there's a couple and they make, it doesn't even have to be a couple. Let's say the person or the buyers make, $200,000. That's going to be very different than a buyer or a group of buyers that make $70,000. Very different situation. And after that, it's really just what they can afford to give monthly toward in this investment. Because some people, we know how their debt goes, right? Like some people are at 50% debt. They can't actually afford what they think they can afford, right? So I think that number is different for every, for how you are taught finances. And that's what makes it a fun conversation, because some people would say, oh, it's only affordable if it's less than 10% of my income. And it's like, well, where are you going to get that near Austin? Depends on your income. It's got to be one heck of an income. All right. So let's see. Very helpful information by Tony. Rebecca, thank you so much. Aaron says affordable is 30%. See, this is what I was talking about. Like it depends on how you were educated on finance growing up. 30% of gross income, and it's on a per person basis. See, and so like my follow-up to that would be, that's assuming that you can live in a house, let's say one house, and if you have 5 people in your family on 30% income, would you be able to afford a house that's 900 square feet or a house that's 3,000 square feet? That's going to really change that affordability factor. So it's interesting. Realty Hack. I know who that is.
That is my wonderful broker.
I know. Hey, thank you for hopping on and supporting us. So 3 to 4 times the median household income in Austin, and that's interesting because I think what that does is that puts a barrier to entry for anybody who wants to come in Austin, right? Like if you want to move to Austin, you know that you have to make X amount, and and that just adds is just a sum of what the median households are. So Bishop is very direct, 500 to 700K. Adrian says very good info. I want to come back before I go to your chart, JJ. I want to come back to something else that Aaron said, because it's a question that's to all of us. He asks, what are our thoughts on how student loan repayments will affect rates?
For real. That's coming in August.
It's coming in August. And it's so Kim, you mentioned Kim or Jack, one of you mentioned the cycle of real estate. Like real estate, other than the pandemic, real estate is always a little more prominent in the spring toward the fall, and then it kind of drops off because nobody wants to move once their kids are already in school. And that's just how it's been, right? Well, now we've got these loan repayments, which are a factor. We've had politics, which have been a factor. And all of these things have thrown off our real estate cycles that we're used to seeing. So who can answer this one?
In my experience, the lender should definitely answer it. I'm just going to throw a quick thing in there. In my experience, the student loan repayments, even though they were on hold, were still a factor in applying and qualifying. So it's always been there. But now it's just going to become reality off paper too. But that's correct, right? Is that even if they are on hold, they were still being accounted for whenever you're trying to qualify.
That's correct, Kim?
Accurate. That is accurate.
Yeah.
And it depends on the program too, right? Like how how we actually qualify them based on their student loan debt. If it's a conventional, if it's FHA, there's some different ways that we figure out that repayment.
Okay. So I think another caveat to that is this might be referring to people that are looking to buy, but what if someone hasn't started the search yet? I don't know that they know that information. Right? Like, I mean, they might know that they have this student loan that's looming. And I don't know how many people are afraid to apply because of this.
Honestly, I mean, we could even be breaking news to people out there right now of like, what? The student loan payments are coming back.
Yeah. So talk about it.
So
talk about it. When they say student loan repayments are coming, what does that mean?
And is this like new policy, old policy? Is it typically level?
The student loan payments have been on pause since COVID. And so, and then the for them to get restarted has been put on pause, and then
it's
pause
been
again, and then pause again.
Was it 2019 or 2020?
2020.
So
right?
2020.
Yeah. And so then part of the debt ceiling negotiations and agreement was that they were going to turn those suckers back on. So here they come, August.
Okay.
All right.
Yeah.
So yeah, Aaron and I have talked about this a lot, and it's going to be interesting because you also have people that their tax rates went up. Their property taxes, went up. It affects their monthly payment. And now the student loan payments are going to be coming due. And they bought these houses. Some people bought these houses with all that as a factor, not knowing that the tax rates were going to do what they did.
Yeah.
Maybe they didn't protest.
Yeah, just because you behave on paper for qualifying doesn't mean that you're actually
and
living that life.
And maybe they overextended. And so what Aaron wants to happen, I don't know about wants to happen, but what Aaron thinks may happen, and you can correct me if I'm wrong, Aaron, is that it's going to hit hard enough where it suppresses our numbers a lot for sales prices. He thinks they're going to dive a little bit. So it's a fun conversation. And so he has a counter argument. I want to counter. It's counted on the purchase of a home. How does this affect cars and credit card? I don't think the average person has budgeted for it. Oh, and I don't want it to happen. I expect it to happen. Jack, Mr. Economist, what do you think about this?
Well, credit card debt is pretty up there nationally right now, right?
Yeah.
So the debt balances they're much higher than they've been in years, and it does affect your rates, right? You know, our ratios, everyone looks at 30%, 35% for the mortgage payment, the PITI, and you're not to exceed. We like to not go past 45, but we can go up to 50. And it's like you said, you get a family of 5 mouths to feed.
Oh, no.
That's all right. It was a good point.
The problem with being mobile is a phone comes in and it blanks me out. Sorry, guys.
Oh.
Yeah, I think, and that's a combination of credit card debt and student loan debt, right? It's up there, and that's affecting the price affordability for folks that want to enter the market, along with the higher interest rates.
What do y'all think about this? So based on the student loan repayment, Aaron seems to think that we've got a 10 to 15% drop in home prices.
All from student loans coming back online. I hadn't really honestly put that together at this time. Again, because I just kept on thinking, well, they've always been a part of the loan qualification process. I think people, I don't know. You're kind of catching me off guard. I'll have to think about that for a minute.
I think when he first asked this question, my immediate thought was, how many people learned from either the previous generation, because that's what we, as humans, that's our collective strength that's our strength, is being able to leverage collective knowledge and grow from it. That's what separates us from the animals, right? How many people looked at the history of what happened and said, I'm not going to let that happen, and have thought differently about it? But also, how many people are in the market now and have experienced a 2008 type situation, or their parents have, and they're in good communication with them? And that is where I would kind of draw that information. And that goes to our migratory chart. It's, in my mind, that's the segue, right? Because you've got a certain level of conversation and education that goes with the financing portion of purchasing homes. And I've had people, and we've talked about this, you've had people call and say, listen, I want to buy multiple houses because I sold my house in California and I sold it for $3 million. I can buy 3 houses in Texas, rent 2 of them out, and I'm going to be good. And then the property taxes hit. And then their student loans are going to hit. Mm-hmm. And now we already have seen an increase in inventory for a short while. We've seen an increase in inventory because of that. So it's a really good question. Austin Homes for Sale, Rambo, he says we're already at 10 to 15%. So he feels like another 10 to 15%, which makes it 30%, is collectively a crash. So I don't think there's another 15% correction left. So Rambo is saying, Austin Homes for Sale, he's saying that he doesn't think there is going to be a crash.
I never think it's going to be a crash. Perhaps maybe just a slow fall. Just like how last fall was really slow. Maybe we're just going to do that again. Because receiving that news, having that new payment, everybody's going to stop and think about what's going on for them budget wise. And so maybe instead of kicking off August and September with our last push of a housing market season, maybe it kind of falls silent and then we go into the holidays. And then people honestly pick it right back up in the spring like they always do. I think I would kind of see it playing out in that way.
I wonder how many people are going to focus on buying all the new toys for Christmas and then forget that they're probably.
Let's not talk about Christmas, Ian.
Hey, that's the thing. You got to think about that now. All the big companies are thinking about that. They're letting people go and coming up with products that are 5 times more expensive at the same time.
We'll be crafting at my house.
It is.
For Christmas.
It is. So Aaron seems to think it'll be about March or June of 2024. How do y'all feel?
So I was gonna tap into just with where the debt, with the student loan debt, when it kicks in, depending also where we are in inflation, right? Like that all correlates back to exactly what Jack started with was, we all lived in the lending world thinking we were going to see this turn right away. And what now is going to happen is, as we are seeing that we can't quite get the threshold or get it pulled down, that in conjunction with the student loan situation is why I have it that exactly what Jack says, this might prolong into 24. Mm-hmm. And to piggyback exactly that March, June, you can see that, right? Like people like, oh, sticker shock, I got to pay loans now. Mm-hmm. Oh, and I was spending money on X, Y, and Z. And now, like, whoa, they got to pull the reins back. So that's also, I feel like, going to have a huge piece on the inflation, which then at that point, from the lending side, we may begin to see rates come down a little bit quicker too. Just kind of go back to that thought of when we'll see them.
So Jack, do you think the short term, the rates are going to stay in that range, or do you think they'll dip below?
I think this is the range. Okay. It's the range, and it's okay. I see the clientele accepting short-term rates. I get so many people asking me for a 5-year fixed and a 5-year adjustable, but the 30-year fixed is right at the 5-year adjustable. So yeah, I'm going to give you a 30-year. I'm going to give you a 5-year adjustable, but I'm going to fix it for 30 years, and we're going to redo this. And again, it's a mindset. It took 14 to 16 months for folks to adjust their mind into acceptance. And for our education process, and we got to keep on preaching this to buyers, is it's all there's a market whether prices go up or down. It's where you feel comfortable, how long are you going to stay in the house for, and what's your long-term goal? Because 7 years, I always tell people, no matter what your rate is, you're going to 5 years from now, it doesn't matter, because you're either going to refinance or you're going to turn it into a rental property, or you're going to step up. But as long as you can afford what you're buying, you'll be fine. It's when you start getting emotional and I got to have this place and I'm stretching my buck and, oh, wait, I forgot about that student loan that no longer is on deferral. Or, it's just having the hard talk, which is a good talk. And
Do you
so
have to have that a lot with your clients, Randy, JJ?
Every time. I mean, if that's
Every time.
I mean, because I feel like that was what I mentioned at the beginning of our chat was all of my buyers' conversations. The biggest concern is, wow, those interest rates, and just have to explain that there's a way to negotiate, navigate this market with the interest rates at this level. It's just a different type of hunting and shopping experience at that point. You're going to do different types of negotiations. So, and then at this point, at least we're not competing and feeling like there's nothing to look at and having to be in a long line of other people. So there's lots of benefits in this type of environment. But then we have to do a lot of heavy lifting whenever we get into negotiations to help make your numbers work right and feel comfortable, whatever is comfortable for you.
So
JJ?
Aaron just says that same thing. It's not all doom and gloom. This is an opportunity. So we saw a lot of people get in any down market or down market. The people that are ready for it win. Win.
I think the fact that Aaron brought up doom and gloom means people are talking about it. I would say maybe I'm more conscious of this. This is probably the most hesitant I've seen buyers. I mean, I got in the business in 2005. Maybe I wasn't working enough people because you should have been hesitant also in 2008, 2012. Maybe they were. Yeah. But I just, like Jack said, I'm preaching about you still have to understand and explore real estate. You have to understand interest rates. You can't be too scared to not understand what 6 to 8 in that range means. Some people think about a crash, but what does that mean? What are you expecting? Are you looking at these charts with real estate professionals? I think generally for Austin, I think there's still long-term growth. I actually think, let's say at worst, it's a little leveled off, maybe a little dip for, I don't know, first, second quarter, 2025, something just like another year or so. But after that, we're still a pretty major city with huge paying jobs and a huge economy.
Insulated.
Mm-hmm.
Insulated. So, and that's kind of been great historically for Austin. Pandemic hit everybody, but like during Austin, like for Austin's historic market growth, we've been pretty consistent. So we don't dip as much when other people dip. I think the discovery of how great Austin was, that peak was a little rough.
I think we're going to dip from the recent peak was,
well,
I think Austin staying so level for so long was like cool and safe. And then we hit this white hot peak. Mm-hmm. So I think that was a little.
I mean, for those of you that are tracking this, it's still happening. Like we're still getting some pretty significant growth happening in the area, but the articles aren't focused on that, I think is what's happening. So Aaron also says he likes what Jack said. I say bulls make money, bears make money. And then I laughed at pigs get slaughtered because I know it's true. So JJ, do you want to pull up that migratory chart, the migratory pattern charts? Yeah. And I've been looking for something like this for a long time. I need to know where you found it.
It's really cool.
And how good it is. Where is this?
Called Redfin.
Oh, so stop it. Here's the thing. Here's the thing about this chart. Like, I want to also know inner city migratory patterns. I want to see numbers. I want to see actual data behind it because
there's some numbers when I scroll down. So
like, what people say and report are very different than what some generic high-level data aggregator is going to pull.
Yeah, this is a reference point, y'all. This is, well, you got to cross-reference this. So March 2023 to May 2023, 26% of Austin home buyers searched to move out of Austin, while 74% look to stay within the metropolitan area. So you'll see this yellow, orange, red. Yep. Meaning red means number of people moving to Austin the most. You see the reddest one from the West Coast.
Yep.
Guess what city? San Francisco.
Yeah. Well, because it's tech driven, right? So that's tech focused.
That's our economy that
San
we're
Diego,
talking about
and then Chicago.
Yeah, there's some Chicago here.
And then straight out of college up there.
There's some Los Angeles here, some Seattle,
so
orange.
Movie studios.
Mm-hmm.
People that want to be celebrities.
And if I there's talk of that going on. It's crazy.
I know.
Moving from Austin, you have light blue at the least and dark blue, meaning they're moving there the most.
I like this chart.
Kind of like Texas, you see down here.
Yep.
Corpus, San Antonio. And if I scroll down, here's the actual like numbers. So for those that are listening, people are moving to Austin from net inflow 1, 2, and 3 are San Francisco, California, Los Angeles, California, Chicago, Illinois. And then outbound metros 1, 2, and 3 is San Antonio, Texas, Killeen, Texas, where I'm from. What's up, Killeen?
Yep.
And, Corpus.
Well,
Christi,
that's
Texas.
retiring military though, right?
That's interesting, but it's like that's where the retired military would retire, but Austin doesn't. I mean, they have a little bit of military, but
I was thinking they would be in the service, and then when they're getting out, they're like, okay, well, I'm going to move toward Austin because there's stuff to do here.
Well, this is outbound.
This is leaving.
So outbound.
Oh, interesting.
To San Antonio, Killeen, and Corpus. Inbound is from SF, LA, Chi-Town.
See here. Okay, so just a quick sidebar about stuff like this. I don't know. I haven't read the methodology section, but my first guess is that this is where they're talking primary residence. But where that falls apart is when you have people that are buying and lying. Right?
I really don't know if this is like search driven, like internet.
Well, that's what I'm saying. Like, how many people are buying and moving, but not actually making that their primary? Or like, I'll give an example. I've had. Can I admit this? Yeah. I've known people that weren't married and they both bought separate houses before they got married. That's fine, right? But they're both first-time buyers. And so the numbers are going to be looking at that. And that happens.
That's kind of funky.
That's all part of the plan.
Yeah. It gets you kind of close. So there's like a little bit of a framework to look at. Yeah.
I'm with Aaron. This chart is amazing. I was going to start talking crap, and then I backed up and shut up because it's got some good stuff. It has some info. I just want to check the data a little bit.
Are you saying the redfin.com users is like a different data point?
I don't have to say it. So Vertical Music said, I came from New York. Love it. Yep. Movie studios are going to be a big hit in the Austin Bastrop area. So tech has already been huge. Link
so
that.
They want to link to the chart.
We'll put that in the description of the comments, but I think you can just post it in the comments here if you've got it.
Even redfin.com/city/number/Texas/Austin.
Yeah.
Link it.
So Aaron's talking about this shows that the Austin tech scene is struggling. You know how I would validate that? I would ask our lenders, how many tech people are you seeing applying versus any other industries? What industries are the people working in that you're seeing applying for loans?
That's really good for me. I'm seeing a lot of teachers right now, and I think it's the time. Wow. It's a timing. I think this is when they look to typically buy anyway, right? Because they're off. But I've had a lot of teachers that are reaching out currently right now. And I think it's because the homes, and we talked about affordability, but when I think about some of the loan structures I'm doing right now, we're in the 350s, 300s right now. You know, and that's affordable for them with them and their spouse. Do y'all have any opinion on that too?
What was the question?
In the text, you know, I do a lot of investor loans, and there's more tech folks investing, but they're not in the state. They're out of state, and they're coming in, and there's still a lot of tech jobs that are strong, but I agree on the home buyer fronts. I'm not seeing a lot of tech.
Did you find that your investor customers really slowed down with the high interest rates at this time? Or are they not participating as much as they were a year before?
No, since November, my investor program has been off the charts.
Interesting.
Okay,
very
question.
aggressive. I have two types of investors, and I have rehab fixer. They fix them up and they refinance and hold them and turn them into rental properties, and then your retail investors. And on the fix and flip rates, they're at 12%. So they are buying opportunities. On the traditional retail investor side, you know, those rates are in the high 7s, mid 8s, and as long as it's cash flowing, they're happy. I'm seeing a lot of people doing 1031s from out of state to avoid their state income tax, 1031 into Texas. So
Okay.
for me, my market is strong in that side, and on the money purchase for owner occupied throughout Texas, we're pretty strong right now.
Are your 1031s coming from like what states or what areas are they coming from?
More from out of state where there's state income taxes, and they're
So,
bringing in
but
some
where?
bucks.
Like New York,
California,
California?
New
Which
York,
state? Mhm.
yeah, a lot of the states that have high income or state income taxes,
And
and
they're
we
not
got maybe 10% is 1031 Texas.
Wow.
okay. And very few of them are concerned about the actual state property taxes.
No, they're actually buying more. They're getting more value here. California, depending on where they're selling, they're doing pretty good. In Texas this is the first time that we've seen Texas actually where price drops at a greater percentage than the United States.
Yeah.
And so
Mhm.
they're coming in and buying opportunity.
Buying the opportunity. I like it. I like this question from Rebecca. She says, has anyone had listing clients talk about getting off of forbearance? People that were trying to sell their house and then all of a sudden they've got student loans coming due.
Oh, I figured that the question was about forbearance.
Sorry.
For the mortgage.
Yeah, mortgage forbearance.
Yeah,
Sorry.
like landlords or.
I have not had that situation, so I can't really speak to that. How about either of you guys?
I don't have too many clients that even was going through forbearance back then. I don't know if Austin had a lot of that.
Yeah.
Yeah, I was gonna say that's one of those questions where it only comes up when it has to come up. Right? Like the term only comes up when it has to come up. As realtors, I don't know. It's not my place, it's the lender's. I look at it like I want to be aware of what's going on so that I can truly help service you, but the lender's going to give you the numbers that you need to prepare you. So I don't get that a lot. Like if they have student loan debt, I don't want to know. I just want to be there to help them find what fits their budget for them.
Hey, I also had the disclaimer data for that map and these moves. It says, this data does not reflect actual moves, just like Ian said. The latest migration analysis is based on a sample of about 2 million Redfin.com users who search for homes across more than 100 metro areas. So this is user interface usage.
Interesting.
Isn't it?
It is.
Do you find it interesting? I asked the panel, San Antonio, Killeen, Corpus. I have my own thoughts about that. What are y'all's thoughts on that? As like they're where they're going, right? Out of our town and going.
Oh, easy answer.
Yeah, I have a word, maybe not fitted, but like something related to like gentrification. Like if you move, you're gonna go to Killeen because it's right there. You could commute to north.
I'm gonna disagree with you on that one.
I don't know the actual definition of gentrification. I think it's to move to a more affordable place because where you're at is increasing. So, I think more people will go north or south as opposed to east or west. Maybe a little east, but I could see the clean San Antonio making sense.
I thought it was interesting that Dallas and Houston are coming in and that people are going out to San Antonio, Clean, and Corpus. Kim, you said you had some thoughts on it. What are they?
Like what we talked about at the very beginning of this, affordability.
Mm-hmm.
Yeah.
Right.
I mean, affordability is a better word.
So it's so interesting because I think we're in a kind of a movement situation where people they've been at their breaking point because of what happened during the pandemic, and lives have shifted around, jobs have shifted around, and there are a lot of people that are a little more focused on where they want to go and why. And not only because of affordability, but also where do they want to spend the next 10, 15 years if they have a choice? And if you look at Austin versus Dallas specifically, Dallas is already a large city. And sure, there's tons of properties available with a fair enough price point, but how far out are they from where the person's going to be working if they have to go and work? How long do they have to be sitting in traffic? Right now, Austin is still a a pea pod. It's super small in comparison. And I mean, if you're willing to go out to Killeen, I think it might be for different reasons. I think there are a lot of people that are going out to Killeen, especially for like investment purposes. If you want to buy a duplex in Killeen, it makes a lot of sense. If you want to buy it in Austin, it's hard. You got to have some capital there. So I think there's so many reasons. I love that question though. Aaron says Austin is almost unaffordable to me, and I make well into six figures. And he said almost unaffordable, but I don't think a lender would look at it that way. I think you look at it that way, and that's another conversation. It's a whole other conversation. I keep going back to this one, thinking, I wonder if there's going to be any kind of conversations around that. I've got upcoming listings that I don't ever go that deep because it's not really my place, I feel like. Anyway. All right, this is good. We're about 45 minutes in. We talked about the migratory charts. We talked about interest rates. So one thing that we didn't talk about is what can people do to find either, like, I'll give examples. Like, what can people do to help save some money on their monthly payment? Is like, talk about buying down points, talk about maybe programs that exist out there that they can look into. Give me something that people need to hear that's positive.
I'm all ears too, so I'm gonna hear what other people
review the strategies.
Positive.
What's old is new, right? There's the buy downs are all there, and it feels good in the first couple years. But what we really have to always educate the buyer is the cost of the buy down. Whether the seller's given the contribution, it can still make its way to the buyer. Is if I take a higher interest rate and I've got $10,000 of buy down fees, what's cheaper? What's a lower cost? Affordability is put the $10,000 in the bank, make the payments, and then if things go positive for the next year and rates come down, you're going to refinance anyway. But those are the tools. We got the 3 2-1s, 2-1s, and 1-1s that make it comfortable. Also, when folks' income goes up on an annual basis, knock on wood, then that's how they prepare for the increases. Kim, do you have any other new programs?
Nothing. That's exactly what you said. That really, it's the same. What I have found is that people are stretching away from that because they got scared around how everybody's taxes jumped. Yeah. And so when you're educating them about how, yes, your P&I is going to be, right, you also need to be prepared for the other two things that are variables. So when it ends up being, your mortgage will be a little bit more. And so that you have to really educate them on that piece as well, not just the 2-1 buy down. Those two variables, home insurance and taxes. That's really crucial to educate them around that.
We know taxes have gone up, but may go down if you continue to protest. We'll see. But how about home insurance? What are we seeing the rates spike to for you? What are you noticing?
It's been a huge increase in the last 2 years. I mean, if you go back a few years ago, what is it, 40%?
Is it mostly investment or residential, standard residential?
Resident investment's gone up higher, but even residential, we've seen some big increases for similar policies. What has been happening is the insurance companies have created some cutbacks in what they're offering to try to keep the premiums lower. But if you compare them to 3 years ago, they've gone up. What are y'all seeing?
I've seen insurance go up.
I've seen everything go up.
Yeah.
But to Aaron's point here is our income able to go up? Right? It's definitely a conversation. Or are we able to save somewhere else? Or what can we do to leverage that? But he says he gets upset that people are so negative. This is America. We'll get through this and come back stronger. I do agree with the same thing. I think that we've always been poised to to be able to make things happen. That's why we've got the freedom to do so. This one's interesting. Oh, Randy had to go. Sorry about that. But this one's interesting, and we can answer it or not. Up to y'all. But Mark says it's a good question because we do know that politics tend to affect election years tend to affect real estate. And so he says, how much will next year's presidential circus impact the housing market and rates? So do you think that rates will go up or down because of this?
I'll go.
Well,
whoever wants to tackle it.
Yeah.
I think we're going to go back to exactly how we started this conversation with like just knowing the ebb and flow of what's going to happen. The circus is going to be what the circus is. As long as it doesn't get out of hand, I think it's all going to be inside of the inflation piece. You guys brought it up. I wasn't going to bring it up. Now this whole debt collection on student loans, that's going to have a little bit of impact. I love how modernized we're already thinking in this panel. So, I would say, is there going to be an impact? I think those are the things that will adhere to being the biggest factor, and there'll be some underlying current around what's going on in the show.
Mm-hmm.
What do you think, Jack?
Well,
you don't have
to toss up. It's a toss up, right? And things will get better after the election.
Yeah,
it's just a toss up. The show is, it's beginning, and no matter what side of the fence you're on, there's an old saying, as long as we know the rules, we can play the game. And the rules are
Solid.
Being manipulated, and they're changing for a while.
Yeah,
but it is what it is.
JJ?
Yeah, remember when I mentioned 2025 and it'll be clear?
Yeah,
I think next year is one of those uncertainty, hesitancy years where people are curious on what's going to happen. And, depending on policy, that could affect like investments a little bit, but I don't want to get too much into that.
I think what it does is people listen to what it's said up here, and then they make these immediate decisions, even if it won't impact them for 6 or 7 years. Like that's not what most people are thinking, I don't think. But also there's some level of confidence based on whatever side is, it sucks that they're sides, but whatever side is in control when you're making your decision. And so some people just want to pause, let that play out, and then start paying closer attention to things, because we do that with everything. We do that with spending, right? You've seen that, right? We do it with just about everything.
It's a great question, though.
It is. I'm going to throw a curveball in, and I want to hear in the comments. This one's going to be good, and then I want to hear from y'all. Who has seen the rumblings coming from Elon Musk, Barbara Cochran, and some of our other extremely wealthy individuals in this nation in regards to commercial real estate? Somebody want to tackle that one?
What comments are they saying?
Well, they're talking about the vacancy rates of commercial.
Oh, like office buildings and stuff?
Office buildings, and how that's going to be, that's going to hit us kind of hard, and then it's going to have a trickle-down effect to residential and a couple other things. And a lot of that is, these companies, they had these work from home, and then they're realizing people don't need it. So why are they paying all this money for these buildings, these office spaces? There's a lot to that.
Yeah, there's a lot of variables. So a lot of companies are using that and mandating people to come back to work so they can, if they don't, they can fire them or let go, right? Because they're trying to trim down. It comes back to location. And we're going to see, it's going to take time, but those office buildings will convert to something. They'll buy at a great opportunity. They'll spend the money to convert it. But I agree. I mean, we're a mobile. Most of us work mobile right?
Yep.
In the lending industry, we were mobile before we were allowed to be mobile.
Yeah.
And in the insurance, in operations, and you can live where you want now. So it will have a trickle down effect. Retail, what's in retail strip centers are going to be the service industries. Everything you can buy online, forget it. I mean, nobody needs to go to the store anymore. I never thought I would ever buy a shirt online because I thought I had to go feel it and touch it. Now I don't go in. Hey, send it over, right?
I'll send you a shirt, by the way. You just got to
Thank you. Yeah, send it. Medium.
You get to pick it. I'm not. You can choose all that online. You can choose the material quality and everything. It's kind of crazy.
Nice.
Oh, we lost her.
Kim fell off.
Maybe. Man, I think this was a really good conversation. I think it's something that people needed to hear and talk about. Jack, do you have any kind of like parting words for people that are just watching right now? They've heard the conversation. What would you want to leave them with?
Okay, gosh, let's leave it with a positive note. I've been doing this over 35 years.
Love it, man.
In 2 different states, and we loan all over the United States, and I'm in the commercial and residential market.
Yeah.
There is always an opportunity. And as long as you know your variables of how long you're going to, if you're buying real estate, how long are you going to be there? What's your goal? I always, and I like to say, your house that you buy, that you live in, is for you to live in, and it will appreciate over time. So I'm very positive. I still buy and sell real estate every day, and I love it. And it's a great wealth builder. So everybody keep on buying.
Keep on buying. JJ, what do you think?
Keep on buying.
Yeah. In line with Jack, I've seen many sales and been involved with many sales in many, many years. And I do think it's challenging. We had themes of affordability, at least in our city, right? We hit a very white hot affordability pattern, meaning a lot more people think it's unaffordable these days in relation to what used to be here. And when people get scared and fearful, and I hear a lot of native Texans, a little bit of complaining, and it's like, hey, look, I don't think this is gonna stop. It could slow down. It might slow down for a couple years. And I encourage people to continue to explore it and embrace it as a tool for, financial strategies. Like Jack said, it's your home. You could get started and understand what's happening and see, if a cleaner San Antonio might be beneficial for you. You obviously see there's something going on in the greater Austin area and on the outskirts. So, continue to explore, continue to look at rates. I like looking at charts. Things should get clearer to you. Don't listen to like blanket statements, because that might deter some opportunities for you.
I like that. I like that you said blanket statements. So I think my takeaway would be pay attention to the people that are doing the things that you want to do, and the people, and really investigate and learn as much as you can about any process. I've got a buyer consult after this, and we're going to sit down, hop on Zoom, and just go over the maps and his pricing and his budget, because I think what some people get caught up in is, oh, my friend said this.
Yeah.
But what's your friend's qualifications? I'm not saying they're not qualified. I'm saying just because they bought a house last year doesn't mean you should buy a house this year.
Yeah.
Right. So anyway, I think we've got a lot to look forward to, and I'm excited that Jack and Kim were able to join us today, and I'm looking forward to seeing y'all in a couple of weeks. And
thanks for having us. JJ. Thank you for having us. It's been great.
Thank you. Thank everybody for the comments. We appreciate you. And Aaron, we'll set that up. All right.
Thanks for tuning in, everybody.
Bye-bye.